In this video, I will reveal one of my favorite and extremely effective scalping strategies. By the way, I opened this deal for $1,000 using this triple moving average strategy. Let's wait for the closing and proceed to the analysis. Okay guys, in this video we will analyze an extremely effective scalping strategy, triple moving average. I will explain what exponential moving average is, show you how to set up this indicator correctly, and we will analyze the classic trading strategies, and then I will show you my own modified version of this strategy. And this strategy allows you to greatly increase the win rate. And at the end, as usual, we are going to hold a trading session with that specific strategy. And by the way, guys, a little thing that I noticed is that a really small percentage of people who watch my videos are actually subscribed to this channel. If you like this kind of content, if you like analysis of strategies, and it turns out to be useful for you, click that subscribe button and I can continue to share my experience on YouTube. To begin with, let's figure out what the moving average is. Simple moving average is a technical indicator that essentially just takes all the price values for a specific period of time and smooths it in one line. In other words, this is the average value of the price. Easy, right? However, today's strategy, we're not using the same typical moving average, but we're using exponential moving average. This indicator works on the same principle, but it gives you more preference to the latest price values, which is why the signals of the strategy are more accurate. Okay, let's get down to business and let's talk about the indicators settings. Open your pocket option, and in my strategy, I actually work with 1 minute time frame, so choose that. Now, as you know from the name of the strategy, Triple EMA, we choose 3 different moving averages for your chart. Now let's talk about the settings of them. So first we're gonna change the type of moving average from SMA, simple moving average, to EMA, exponential moving average. And we change the period to 15. And we're gonna save the color green. Now second one, we change the type to EMA, same here, and period is going to be 30 here. In styles, I'm gonna be changing the color to yellow, so it would be easier for us to see the difference between them. And the third one, same story, EMA, and the period is gonna be 60. And in styles, I'm gonna choose red, so you can see the difference. And when you're finished with the settings, it's gonna look something like this. Now let's talk about when we can actually trade with this strategy of Triple EMA. First thing, we need to open an existing trend, right? For example, here we can see an uptrend. All 3 lines are disconnected and they are going up. The trend itself, the chart, right? Not the trend, the chart is above those 3 lines. Same thing goes to the downtrend. Here we can see 3 lines are also disconnected. They are going down and the chart is under those 3 lines. For example, in situations like this, we cannot trade when the lines are intertwined with each other or when they are parallel to each other. There is no trend, current trend in situations like that, and we do not work with it. When we find a good trend / good situation on the market, we need to wait till the price is gonna go lower than 15 EMA line or 30 EMA line. But if it goes lower than 60 EMA line, this is bad, we're not working with it, because it may mean the trend reversal or the price is gonna go even lower. We don't need that. Let's continue with this trend. So right here, you can see that the price is going through the 15 EMA line, and now we need to wait till the next candlestick is gonna close higher than 15 EMA line. Here you can see that the next candlestick closes higher than 15 EMA line. This is the signal for us to open a deal to start trading. Let's mark this place and we're gonna choose a wait. So right here, we are opening a trading deal on an increase, and let's see what is going to happen here. So you can see that the price is going to close higher than the place where we opened the deal, and we got our deal in black. Now let's talk about downtrend. So here you can clearly see that this is a downtrend. The chart is below the 3 EMA lines, and all 3 EMA lines are looking at the same direction. We need to wait till the price is gonna go higher than 15 EMA or 30 EMA. So let's wait for that. And here you can see that the price is going up and higher than 15 EMA line. Now we need to wait for the next candlestick, which is gonna go outside of 15 EMA line. So you can see this is lower, this one is lower, and this one is the right one. This goes outside of 15 EMA place, you know what I mean. Let's put a little mark here. And right here, we need to open our deal on a downtrend, right? Same 3 minutes for that one. And as you can see here, our deal is going to be closed in black. Just like any other strategy, this strategy has its flaws. Let's talk about it. So in this example, we have clearly an upward trend. All the signs are here, you can clearly see it. So now we are waiting when the price is going to cross 15 or 30 EMS line. It happens right here, right now. Let's put a little sign on it. Now we are waiting when the next candlestick is going to close higher than 50 EMA line, and it happens right here. So based on this strategy, you should open a deal on increase right here, right now for 3 minutes, right? But let's see what's going to happen here. And you can clearly see that we would lose our money in this case. The deal would be closed in red. Why this happens? It happens because the value of the market actually dropped. And now I'm going to show you my strategy, which is going to help you to, you know, escape situations like that and get less signals, false signals of the strategy. So let's talk about it, how we can get rid of those false signals that this strategy gives us. So in my strategy, I actually use additional indicator, and it is stochastic escalator. This indicator we actually talked about in my free course, which you can get if you text me on my Telegram. The link is going to be in the description box down below. Just text me, I will learn. I'm going to give you this course completely for free. We talked about the stochastic escalator, other indicators, we talked about risk management and many other things in that course. But let's get back to our situation. So here we can see that the price breaks through 15 and 30 EMA, and we are waiting for the price to go outside of 15 EMA, right? And we get it right here. But if you look at stochastic escalator, it doesn't give us any signals to open a deal. The signal is going to be actually when the orange line is going to cross the blue line from down up, right? That's why we just go outside of the situation. We don't get this false signal, we don't lose our money, and let's look at what's going to happen next. The price is again going outside of 15 EMA and goes down, right? Now we wait for the price go outside of 15 EMA again, and it happens right here. Now you look at this stochastic escalator, and you can see that it actually gives us the signal. It clearly gives us the signal for opening a new deal. Let's change this little sign right higher. So right here, we waiting for the signal. We got the signal there, and we got additional signal from stochastic. That's why right here we are opening our deal for an increase for 3 minutes, and let's see what's gonna happen. And you can see that the price is actually shooting up and that's why we're always trying to get a couple of confirmations. First one is the price going through 15 or 30 EMA, and the second one is stochastic escalator. Same thing goes to stochastic with a downward trend. So on this example, you can see downward trend. We have all of the signs, all the lines are going down. They are not intertwining, and the chart is below them. And let's see what's going to happen here. So first thing, of course, the price is going through, breaking through the 15 EMA line. We are waiting for the next candlestick, which also breaks through 15 EMA line, and we have the signal for opening the trade. You're looking at stochastic escalator. It also gives us the signal for us to open a deal, because you can see the lines are intertwining or crossing each other. So that means that the price is going to go down. Let's put a little sign for us here. And imagine that we are opening a deal for a downward trend. Let's see what is going to happen in 3 minutes, and we would get our money here. So the deal would be closed in black. Now guys, let's move on to our trading session finally. And as you can see, we already have 3 EMA and stochastic is on. In this case, we're gonna work with 3-minute expiration, and the amount of money that we're gonna use is $500. It's approximately like 2.5% of my balance. I think this risk management is really good for this strategy. So let's get down to business, as I like to say. So for example, here we had already had like a couple of points where we could open a deal, but we're gonna skip this one, and we will try to find something that just happened, but it's gonna be similar to this one. So right here, for example, you can see that the candlestick is breaking through 15 EMA line. Now we're waiting for the next candlestick to be closed above the 15 EMA line, and the stochastic is going to give us the signal for our deal. Let's wait for that, and then we will decide what we're going to do. Guys, so we are going to continue wait for this deal, and I just wanted to remind you that if the price is gonna cross the 60 line, that means that we're gonna cancel this deal, and we will have to try to find another one, because if it breaks through 60 line, right, that means that there's gonna be a trend reversal and the change of direction of the price. But for now, let's just wait and see what's gonna happen here. Well, guys, right here you can see that the price is trying to break through 60 line, and the EMA lines are almost intertwined. That's the sign for us to move on to another one, because we're just not gonna work with it. I'm not gonna get rid of this fragment of the video, because this is one of the examples where you should not wait for the moment to enter a deal in cases like that. So yeah, it is what it is sometimes. And this is another good example of situations like that. The price is gonna go down, and it's just like no point. Even if it's gonna get a reversal, it's still not gonna be profitable for us. Finally, we have a case that we can use, and this is going to be our first trading deal. We are opening it for a downward trend. It's going to be 2 of them for $500, even though the stochastic doesn't give us a signal just yet. If you look at like previous moments in the chart, you can see the interesting situation. So right here in this specific case, right here we can see the good place to open a deal, but at the same time stochastic gives us the signal a bit later, even though like it's a bit confusing, but here we see the same situation. The price is still gonna go down. That's why we're opening a deal for a decrease. Let's wait for the end of it. And while we wait, speaking of which, I'm gonna continue to try and find other currency pairs, just because it takes so long sometimes to find a good place, and I don't want to make this video an hour long, so that's why I'm gonna try to find another one while this one is still in process. Okay, so right here, I'm gonna open the second deal. You can see the intertwining of stochastic and the breaking through the 15 EMA line. That's why we're opening the second deal here and moving on to another deal, to another currency pair. And while we were trying to find another deal, the first one or two of them is already closed in black, which is amazing. So let's continue with our work here. And right here, for example, we are going to skip this currency pair because I was thinking about it, but stochastic is really close to oversold price range, so that's why we're gonna skip this one. And speaking of, our second or third deal is also closed in black, which is a really good news. And let's move on to some other place where we can actually work. And here, guys, we're gonna open the third or fourth deal, whatever you want. But this one is really risky because the stochastic is like right in the middle. The closer to the 80 line, or perfectly it's gonna be above it, the better, but it's not the main concern of mine. So right now we are going to downtrend. All three lines are going down, right? Everything is fine. But if you look back on the history or just change the time frame to 5 minutes, you will see that in general, this is global uptrend, and this period is actually a correction. So that's why this is a really risky one, but let's see the results. And I actually think that that's not a bad deal. That's why I'm opening it, and you will see at least the example of situations like that. Risky ones, but still they might work. Whew, that was risky, but we still got the profit out of it. I would say it was just lucky, but that was again an example for you to see what is a risky example. Just be careful, because if your trend is globally an upward trend and this period is just downward trend, still you can do this, but be careful. Now let's try to find one more currency pair and we can finish the session for today. Now, friends, we could actually open a deal for a downward trend, but unfortunately stochastic doesn't give us the signal. That's why I'm gonna skip this one and still try to find the last one. As you can tell, it's not easy, but what is easy in life? I would say almost nothing. So let's continue. Okay, finally, we're opening our last trading deal for $500. You can see the stochastic intertwining, and this candlestick broke through 15 EMA line, and then we see reversal, and it goes through 15 EMA back again. Waiting for 3 minutes now, and we're gonna be done for today. Okay, guys, this was the final deal and it's closed in black, and this is gonna be the end of our trading session. Thank you so much for watching this one. We had a great trading session and we got almost $2,000 in profit. Oh my god, that's so cool. However, do not get overexcited on this topic because there is no such strategy that will allow you to always win, right? So therefore, if you want to get a stable profit, first thing you need to do is to learn the basic knowledge in trading. Easy. And if you're ready to learn, text me on my Telegram, link to which is going to be in the description box down below, and get my trading course absolutely for free. 9 lessons are waiting for you there, in which we are going to analyze topics such as risk management, indicators, and the basics of technical analysis. Well, if you watched till this point of this video, I hope it was useful for you. So click that like button, subscribe to this channel, and of course soon I will release the next analysis of another strategy. And meanwhile, if you have nothing else to do, you can watch my other videos, for example the video on MACD indicator, by clicking right there on that link, and I will see you on my next video. Bye bye!